We're going to switch gears and go to the aforementioned Fed policy. Joining me now, the great Judy Shelton, senior fellow at the Independent Institute, former Trump economic advisor. All right, Judy, first up is the meeting next week, Jay Powell and the FOMC. This is very Hamlet-like, to be or not to be, to raise the rate, to not raise the rate. What are you thinking here? What's your... I want to know your best guess, but I want to know your best logic, too.
I think this is a very critical moment for Chairman Powell. This is the kind of potential crisis moment that defines the legacy of a central bank chair. And the decision has been greatly complicated by this. I think he should pause. But I have thought that the Fed should pause because this past year, they have normalized in one fell swoop by going up to 4.58% as the effective Fed funds rate. They have started to remind people that you can imagine a world where there's a positive return, a real rate of interest return, because expectations for future inflation based on the Cleveland Fed for the next 10 years, people do think the Fed can bring it back to about 2.2%. So if you can have a cash account that pays 4.58, you start to think, well, that gives me about a 2.3% return on a riskless asset, because cash that is parked at the Fed, which is what banks do through their reserve accounts and what reverse repo money market mutual funds do, is they just park that cash, and to get that return, that's one of the best deals they have going. So I think for Powell, it should be zero, but for reasons that continuing to raise is not necessarily the best way to fight the inflation. I know I go against some others in thinking that, but I really think that the Fed's model isn't working as they expected. We're still getting strong aggregate demand, decent growth, maybe 3% for the first quarter, record low unemployment. And that is not the way Chair Powell outlined the way the process would play out. So I think the Fed needs to re-examine the assumptions of their model, and they shouldn't let that model collapse into an axiom of the higher the interest rate, the lower the inflation. Because I think they're also hurting the supply side by raising the cost of capital.
Well, of course, Joe Biden's doing his best to damage the supply side. Also, maybe the House Republicans will ride to the rescue. You know, Judy, I had John Taylor on, from Stanford, I guess it was a week ago Friday.
Sure.
His view was the inflation rate is more or less 4%, maybe 4% plus. Now, I know you're talking about expected inflation, but he thought the actual inflation was maybe 4 to 5%. And he thought the Taylor rule, the most recent update, was a 6% Fed funds rate. So today it's, I'm going to call it 4 3/4. That's a long stone's throw from 6 when you could be in the middle of some kind of banking crisis.
I would still pause. I understand John's reasoning. And at one point, that would have, if we followed the Taylor rule, we could be talking about rates at 11%. So I think that we forget that so much of this inflation was a result of the fiscal transfer payments. And those are still in the system, but they are vastly diminished. And I think that in spite of the Fed, we would see inflation coming back down. So I don't want the Fed to do needless damage. That's why I would say zero next week. I think that Powell will be tempted to do 25 basis points because we're into a new world now where behavioral finance is more important than all of the theories. And as Paul Volcker used to say, if it boiled down to his best advice to a central banker, it's mystique. People have to believe that the Fed has some magic solutions here, because if they don't believe that, then the system really does start to fall apart. And a bank run is not a pretty thing. So I understand why they are working with alacrity to try to reassure people. It's just that, as you mentioned, Secretary Yellen talking about it did not instill confidence, and I very much regretted seeing her being a shill for the political
Yeah.
program of the Biden administration. She knows better.
That's the worst sin of all. You know, a Treasury Secretary is such an important position. It's such a visible position. And, of course, it's the financial arm of the U.S. government. And so when you see the secretary cave in and, as you say, political shill, I mean, you don't have to do that. I've been through it. I've never been secretary. I work with Steve Mnuchin. You don't have to do that. You can pivot to other things and avoid those kinds of pitfalls. By the way, for what it's worth, I agree with you. I think the Fed I also think the Fed should pause next week. But, you know, Judy, just at the end of the day here on this whole sort of sad story of whatever's going to happen, inflation is the cruelest tax of all, and it affects us in so many different ways, you know, from real, actual rising prices on groceries and fuel and food and real wages falling, and now it's caught up to the stock and bond markets, and now it's caught up to the banking system. I mean, people who denied inflation really have a lot to answer for, it seems to me.
Well, you know, having this hands-on management of the economy via central banks, I think is proving to be a mistake. And ratcheting interest rates up or down and trying to use that to direct economic outcomes is proving to be damaging to the economy. And right now, yes, if I thought that raising 100 or 200 basis points would solve inflation, I would be all for it. But I don't think so. And I think that if you start putting people out of work these days, either the private sector will give generous severance packages or government unemployment benefits will kick in, and those people will have demand. That is, they'll still be receiving some form of income or compensation, but no longer contributing to output. So the Fed talks about needing to equilibrate demand and supply. But in fact, if they put companies out of business and people out of work, I think they'll make inflation worse because we won't have the increased supply to deal with pretty steady demand. And that's what I would want to prevent.
Well, I think that's why conservatives want low taxes and fewer regulations and a sound dollar. Actually, a commodity-backed sound dollar, which we kind of have right now, although nobody's really looking at it. Anyway, Judy Shelton, the best of the best. Thanks very much for your time. Have a great week.